So, you want to learn how to day trade? Well, in this video, we're going to be walking you through each of the intense steps to get started. By the end of this video, you will have a concrete idea of what needs to get done in order for you to become, well, a trader. Number one, numero uno, we're going to be talking about how to pick a broker, because in order to start trading, you best be picking a good broker. Number two, we're going to be talking about how to set up your broker, what needs to happen in order for you to start actually using that broker. Number three, we're going to be talking about how much money you need in order to fund your account. How much do you need to actually start trading and start making some progress with your trading goals? Number four, we're going to be talking about how to choose the correct style of trading. Are you going to be a greedy trader? Are you going to be a spoiled brat trader? What type of trading are you going to be doing, and how do you actually go about using that style to actually grow your account? Number five, we're going to be talking about how to scan for the very best of opportunities and then how to exploit them. Because the stock market is a beautiful battlefield, and in order to win a battle, well, you need to be able to find where the battle is. Number six, we're going to be talking about how to set realistic goals. So many people screw themselves out right out of the gate because they don't set realistic goals. If you're not setting realistic goals and you don't have a realistic plan on how to get there, well, you won't get there. And lastly, number seven, education and practice. We're going to be talking about how to actually go out and acquire the knowledge that you need and back test the knowledge in order to figure out what is the style that's going to work the best for you. And then you're going to figure out how to actually gain the skill set that's going to make you into a better trader. And honestly, while no trading video is going to be enough for you to become a trader, this video is going to give you a huge boost if you're able to sit through the entire video. It's going to give you a concrete guide with everything that you need to know in order to really just have this structured mindset to start approaching your trading. This video is great for people who know nothing about trading, but it's also good for people who, well, they haven't really had a clear pathway to succeed in trading. They're sort of lost, they're sort of on the sidelines, but the only thing that I ask for all the work that goes into a video like this is that you hit that ravishing like button. Okay, number one, picking a broker. So when I started trading, most brokers had huge commissions. Almost every single broker had commissions. And then all of a sudden Robinhood came out and they didn't have any commissions. But today, almost no good broker has commissions. If you're paying commissions and you live in the United States, you're probably getting robbed. People like to say, oh, you get what you pay for when it comes to getting free commissions. But the truth is that brokers have tons of different ways of making money, and you don't need to give them an extra way of making money. But you do need to know that brokers today make most of their money through you executing trades. They don't give a hoot nor a holler whether or not you make money because they win every single trade. So you can see there's a huge incentive for you to get into trading. But anyways, while most today won't charge you commissions, they will still skim some money off the top. Brokers today profit every time you place a trade by skimming off your order on both the buy side and the sell side and executing you out at unfavorable prices. This is called slippage. But if you are signing up with a broker, the main things to look for are the platform's ease of use, the execution speed, the slippage, commissions, and if you have a small account, the minimum deposit. And the two brokers that I always recommend traders start with are Webull and Thinkorswim. I'll put the links in the description below. Thinkorswim has a very advanced, but also as a result, fairly complicated platform. They have tons and tons of tools, such as the ability to use on-demand trading to backtest your trading and practice on previous price action from dates in the past. And they are commission-free for most securities that you trade. Webull is also quite powerful, but they are a lot easier to get started with, and I usually recommend them over Thinkorswim as they make it a lot easier to get up and trading as fast as possible. They also offer a lot more hand-holding than Thinkorswim does with sort of this really easy to use platform. But they also are commission free and have no minimum deposit. One thing to know is that you're never going to find a perfect broker. A lot of people will go and they'll be like, oh, Webull was down today, or oh, Thinkorswim was down today, they suck. But the truth is that if you're relying on just one broker, it's not the broker that sucks. It's actually you that sucks for not having a backup broker. If you are a serious trader, you're going to need to have at least two different brokers. And they don't have to be Thinkorswim or Webull. Look around, see what works best for you. If you live outside of the US, I also recommend Interactive Brokers. Interactive Brokers, well, they do charge commissions, but it's a very powerful platform, and I've gotten great reviews from them, from many of the students that we have in ZipTrader U and other people that I've worked with in the ZipTrader communities. Interactive Brokers is a pretty good platform. Lastly, Robinhood is perhaps the most popular broker right now, and I have dissed on Robinhood quite a bit in the past, and I actually made a whole video on why I'll never use Robinhood, but just as a quick recap, Robinhood was actually curtailed to beginning investors and not traders, investors and not traders, and that's a huge deal because traders are focused on quick, frequent movements, whereas investing is buying and holding. Honestly, Robinhood has improved quite a bit, and I don't want to give them too much slack, but their executions tend to be quite slow. They tend to have a lot of slippage, which means that the broker is making more money off skimming your trades. Some people love Robinhood. You can try it out. It's up to you. But for my trading style and for my own trading sanity, it doesn't work for me. Okay, number 2, numero dos. How to set up a broker. So as a new trader, you will have the option to choose between a cash account and a margin account. Now, the lovely cash account just means that you can only trade with cash in your account, and the margin means that you can trade with both the cash in your account and the added margin, which is essentially like an extra loan that the broker gives you to buy stocks with. This gives you extra buying power. Unfortunately, this is kind of like going to Vegas and then gambling with loaned funds. It doesn't really make sense unless you have the money to back it up outside of the platform. If you are a new trader, I recommend just using a cash account. Margin accounts can be helpful for extending your buying power, but if you use them and you have under 25K in your account, you'll be subject to a pesky rule called the PDT rule. This makes it so that you can only do 3 day trades within a 5-day period. I have a whole other video talking about how to avoid this rule, so we won't go more into this than that. But my suggestion, if you are at the beginning stage, is just choose a cash account and work on growing that up. It's going to be painful, but this part of the process is going to be painful. And we will talk more about this later. Okay, but now it's time to actually go and set up the platform itself. So if you just signed up with a broker, you should have a complete blank slate like this. This just shows how your price has moved throughout the day. On the bottom, you'll have your volume, voluminous volume. That is just the number of shares being traded throughout the given time span. But based on your style of trading, you'll also want to add studies called indicators to your chart. This is my setup. This is our price strength SMA line, which measures price strength. If the price is trading above it, we have positive price strength. If it's below it, we have negative price strength. And the red measures direction. If we are above it, positive direction. If we are below it, negative direction. The RSI right here, this is our relative strength index. It basically measures whether the stock is getting too heated or too underheated. If it's too heated, it turns red. This is called overbought. If it's underheated, it turns blue. This is oversold. If it's blue, you could consider this one sign of a stock being a good deal. But these indicators don't guarantee good entry points. A lot of people think they do, but that's totally a misunderstanding of the point of indicators. There's also a lot of controversy over indicators as people say they are scams because they don't guarantee you entry points, but people who say that they are scams are just morons that don't understand what they do. Indicators literally just take the price action that's already on the chart and they combust it together into a formula to give our eyes a better way to analyze the charts. So if you think that's a scam, then what you're saying is that the chart itself is a scam and you're saying that the stock is a scam, and that means that you're a moron. Indicators just simply take the price action that we already have on the chart and, well, put it into a way that makes it easier for our eyes to comprehend it. My eyes can't take the price action and tell me where it's overbuying and overselling, for example. So that's why I use indicators. If you are a cyborg, then maybe you can do this without indicators. But I'm not, so I use indicators. And it's also true that some traders choose not to use any indicators at all and then just sort of focus on the chart itself. And it really depends on the trading style that you're doing. For me, I measure price strength, so I want to have price strength indicators. I measure overselling and overbuying. I measure positive direction, right? So these are all things that I need on my chart. So it really depends on the type of trading that you're doing and your goals. Okay, next. Fund your account. Everybody loves this part. Now, one of the things that I always tell new traders is that it's not the capital that matters, it's the skill, right? Skill over capital when you're a beginner. You could have hundreds of thousands of dollars to millions of dollars, but if you don't have the skill, you're just going to lose it all in the stock market. The stock market doesn't respect your capital just because you have a lot of it. It's your skill set that's going to protect you and actually help you get more capital. So focus on your skills over capital in the beginning. You could do paper trading, which allows you to trade with $0 and you just use a simulated platform. 100% you should be doing paper trading first, and then after you do paper trading and you've proved yourself with paper trading, then what you're going to do is you're going to start with a small account of real money. Paper trading is great for learning the mechanics, but once you've gone through the paper trading, then you have to start going to real money, and I would say go from paper trading to a small account of about $500. If you're trading with about $500, that's enough where you'll see some gains, but you are also having to deal with some emotions. You're dealing with the emotions that come with trading with real money and having real money on the line. And that's a very important thing because a lot of people, they'll go from paper trading, which is perfect. They'll learn how to do the mechanics and then they'll do really well with paper trading. But when you go to real money, it's not the same thing because you have a lot of money on the line. So make sure that you're doing this in a way that makes sense. You do paper trading, then you scale up slowly to a small account of $500. Obviously, it's going to take a long time to grow a small account like that, right? It's going to be very, very torturous. But that's the whole point, right? Because if you're tortured then, if you learn the skill set the hard way, then once you have a bigger account, then you'll be able to manage it properly. If you learn capital allocation at a small account of $500, if you learn how to figure out how to get that money and grow it, then you'll slowly learn and develop the skill set that's needed to actually grow a larger account. It's also worth mentioning that if you are using a cash account, you won't have a PDT rule, but you'll have to deal with settlement times. Settlement times are quite tricky because each time you sell a stock, you'll have to wait 2 days in order to get your buying power back. This is actually an important lesson though because it'll teach you how to deal with your capital allocation and using your account efficiently to make sure you always have capital available for new moves. But folks, this is a stage where you're growing a small account. Enjoy the struggle because this is where you're actually building the skill set that's going to be so necessary down the line. And also, yes, you are welcome to add more money if you've proven yourself profitable. You don't have to grow that small account to the amount that you want to eventually trade with. Just make sure that you're proving yourself on each stage before you go and add more capital. But you can do it the natural way too, just organically growing that small account until you get to the point you want to be at. Okay, number 4, choose your style of trading. There are tons and tons of different ways and different styles and different methodologies, I guess those are all synonyms, of how to start trading and growing your account. When I started trading, I didn't have the ability to sit in front of the screen all day due to school and job commitments at that time. So I focused more on swing trading in the beginning, which means holding for multiple days to multiple weeks. And likewise, my style focuses on both day and swing trading, and I curtail my positions based on what my schedule looks like. Obviously, the stock market doesn't give a hoot about your schedule, but you can find opportunities that tend to follow certain schedules that are more conducive to what your goals and your current time commitments are. But you have to find a style that works for you. If you go online, there's tons of conflicting information and different opinions and strategies that will make your head spin. A lot of beginners, unfortunately, go and binge on tons of just random trading content, and they just get so confused, and they get into the state of analysis paralysis where they really don't know what to do. But the one universal truth, no matter what trading style you get to, you just have to understand that there's one universal truth of trading, and that's that trading is a probability game. It's sort of like structured gambling. As traders, our whole goal is to put the probabilities, to push the probabilities into our favor so that we come out ahead on the long run. But when you're playing a probability game, that means that not any single trade that you take matters, right? It means that the trades that you take over the long run matter. If you win on one trade or you lose on the other trade, that means nothing. You have to do enough trades to actually see if a strategy works or not, because just winning or losing one trade doesn't actually say anything about the trade itself, because it's a probability game. So if you're going to win 70% of the time, which is a high number, and you just lose the next time, how do you know you're not in that 30% where you're supposed to lose? But my own style of trading is taking advantage of clean price strength. In an oversimplified description, that means playing off clean runs like this Apple play here, where we break into clean price strength over our blue SMA line. And then we have this clean run before it breaks back below it and validates us out. Or this Facebook play here, where we break into an upward direction over our red directional SMA line, have a confirmation of price strength, and then ride it until validation or a break of said price strength. But of course, there is more to it than that. Since trading is a probability game, we have to identify what creates and powers these runs before we're even buying in a confirmation of price strength. We have to figure out what catalysts, what price drivers, and what patterns, what setups precede this run, and only then can we take advantage of it. I call these elevating and deprecating factors, things that make it more likely to go up and things that make it more likely to go down. But this video isn't about my style. This video is about introducing you into trading and figuring out what structure is going to be the best fit for you and your trading goals. And honestly, if you want to learn more about my style, I have over 200 free videos, and I have a complete structured course with a private tutoring chat attached if my style is something that appeals to you. But I want you to go out and familiarize yourself with tons of different styles and then see what works best for you. But you should know that there are two gospels of trading. There's the technicals, what the chart is doing and saying. And there's the fundamentals, what is happening outside the chart. The news, the company itself, the balance sheet, the catalysts, what's happening, what the company's doing, blah, blah, blah. Technicals show you where to enter. The chart shows you where to enter, but fundamentals explain why. why you were entering. And as short-term traders, we do have more of a focus on the technicals as compared to the fundamentals, but you need to have both in order to really understand the full picture of why it is that you're doing what you're doing and how to actually play the fluctuations. For example, we called out DGLY, which was a body cam manufacturing company. They got a contract to supply body cams to police over a weekend, in which we called it out, over a weekend with tons of laws being passed, and just being aware of this current event would have gotten you access to a lot of this 83% move. But in order to know when to enter and exit, you'd have to understand how to read the technicals on the chart. But a lot of the opportunities we talk about on this channel have to do with overreactions to fundamental news, so there's a combination of both. Since every reaction in the stock market is a dirty overreaction, if you can find stocks that overreact massively to news, you can play off their short-term correction. For example, we called out Facebook as it overreacted to news on Friday, and then the first two trading days, the first two trading periods this week, we got an overreaction correction. But these are very common, and some are of slower pace for folks swing trading. For example, Sava had our overreaction, and because it was so violent, it created so much upside that when we eventually got just a small piece of good news, it ran up massively. This was another one of our callouts, of course. But in other situations, you're going to have less fundamentals to trade off of, and that's fine too. That's why there's a balance, right? For example, Zoom tends to oversell and overbuy during its consistent uptrend. That means we take advantage of overselling points and trade their clean strength to overbought. Or MU, literally buying at any time historically it oversold on MU and selling out at overbought resulted in a good position. But of course, it's not as easy as that. You also have to figure out how to control your risk for when the pattern inevitably breaks. Another example of a fundamental catalyst are FDA approval plays. Now, I've built my reputation on these plays. I do a top penny stocks video every month where I talk about the upcoming FDA approvals and such like that. This is a huge deal. Why? Because FDA approvals cause huge fluctuations and huge increases if it's a good news event. And we have the dates beforehand, so we can say, okay, well, how do we play this? Some of our examples of recent FDA approval plays were EVOC, EVFM, and XSPA, but we've been doing this for a long time, and you can go back to our top penny stocks video playlist, and you can look at tons of ones that we've called out before. But again, we'll just talk about EVOC, EVFM, and XSPA. So these aren't cherry-picked examples, but rather ones that we had in our previous top stock video. Look at this EVFM play. It ran up massively on approval, but then got beat down almost 70% of the move right after. So knowing that an approval is coming is a powerful cue, right? It's a powerful fundamental cue. But the technicals are also important. They explain how to actually handle this. Blowing up the chart, your aim is to buy in at confirmation of a good setup and strength and sell out at validation. It allows you to catch most of the move most of the time. But if you don't know how to combine both the technicals and the fundamentals, well, you wouldn't have been able to catch this move, right? You would have only said, hey, well, there's a catalyst. I don't know when to buy it. I'll just buy it here. And then I'll just sell it randomly here. But you don't know where to trade it, right? You don't know where your entries and exits are. So you need the technicals to explain what you're doing. You need the technicals to explain what you're doing. But anyways, this is a gross oversimplification of trading in our trading strategy, but I just wanted to give you an idea of how technicals and fundamentals come together. Okay, number 5, how do you actually find opportunities to go forward and exploit? Well, there are a lot of scanners and scanning techniques that we teach, but if you are a complete beginner, my suggestion would be to just start with the easiest of opportunities. And for me, that is overreaction plays. Plays that get beat down massively on earnings or bad news and then show signs of increasing to overreaction correction. If you're trying to trade earnings, you can find upcoming earnings using an earnings calendar such as Webull. But I'd also look at consistent movers. A large portion of my day trades are on instruments called leveraged ETFs. Some of them are UCO and ESCO. SPXL, SPXS, LabU, and LabD. But these are extremely powerful, and if you choose the right ones, you're going to have tons of opportunities to trade off of. You want frequent runners, you want ones that are frequently volatile so that you can trade the volatility. Okay, number 6, set realistic goals. Now, this may sound a little bit defeatist, but set something that's attainable. A lot of people are like, oh, I want to make $10 million my first year trading, or oh, I want to make $1 billion. No, folks, you need to set realistic goals. Set something that's low, but also slightly enough to motivate you. Say maybe, oh, my goal is going to be to make $100 per week trading. And then once you hit that, $100 per day. Then once you hit that, $200 per day. And then you just keep going and you go and go and go, and you just keep hitting each attainable goal. That's very motivating because you pass each stage, feel accomplished, and you get somewhere. And those small attainable goals can stack up into big goals. But be practical with this. Figure out everything that needs to happen in order to, well, hit your goal. What opportunities will you need to take advantage of? What percentage gain will you need to make on your account size to have that amount? And how will you manage your new capital once you earn it? The only thing that I'd really avoid at this stage is getting into a mindset of focusing on short-term profits. I see so often that people are like, blah, 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 where is the new winner? What stock is going to be the new winner? Or blah, 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 X stock is going to skyrocket. It's going to the moon. Well, no, folks, it's not about finding the next stock that's going to run 100%. It's not about finding the stock that's going to just become the next Netflix. It really doesn't matter because as traders, guess what? We're trying to trade for the long term. That means that an individual trade and individual win doesn't matter at all. What matters is that we stack up consistent wins over the long run. Me personally, I'd rather have tons of consistent runs than just have one huge run. If you can't repeat a trade long term, then your short-term profits are really just long-term losses in disguise. So know that. It's fine to catch a huge runner if you have a consistent way to measure your risk and protect your downside. But if you don't have that, then don't try to catch those runners. But part of setting realistic goals is also having realistic effort, and this is where we get to my last point. Number 7 is educate yourself and practice. Practice, practice, practice. So the truth is you aren't going to get anywhere in the stock market without a lot of trial and error. But there are always ways to speed up the process. And honestly, there are tons and tons of YouTube creators and educators online that have styles and strategies of trading that can help you get introduced into trading and what it means to actually be a trader. In fact, there's limitless resources online. At my channel, I have 200 free videos, right? And I post multiple videos per week. I also have a structured course, right? There's just tons of content online, both free and paid, based on your goals. But understand that there's more to trading than meets the eyes. A lot of trading styles are watered down in order to get you more interested, and you have to have the discipline to learn all the details of each new style and work out the kinks. For example, I talk about how important confirmation and validation is to setting clear and clean entries and exit points. But this often leads people to thinking our strategy is all about confirmation and validation, and that somehow you can just simply buy in when a stock breaks above the SMA line. But that is not accurate. That's not it at all. This is similar to me teaching you how to build a plane. It's easy for everyone to comprehend that a plane will fly if it has wings and an engine. But it's not so easy to comprehend the many mechanical details that power it and actually make it move. And this is the same thing when it comes to confirmation and validation. It's easy for me to introduce people into the mechanics of buying and selling points and controlling risk, but the hope in presenting this easy to understand concept first is that learning about the utter simplicity of it makes you more motivated to learn about the complexities behind it. That is to say, we teach what is trading before we teach why is trading. It draws you in with something that you can understand very easily and then invites you to learn more about the complexities. But my point is that you actually have to take the time to learn everything about each individual strategy that you're learning before you just give it up. A lot of people will just choose random strategies, and then when they don't get it right away, they go and they throw that out and they learn another strategy, and then that doesn't work because they don't give it the time of the day. So pick something, dedicate your time to it, and then grow your account with it. If it doesn't work after a certain amount of trades, then you can throw it out. Who cares, right? It doesn't work. But you need to give it a fair shot. And this leads me to my final point. Find a community that empowers you and gives you the structure to be accountable to yourself and also provides you with a clear pathway to meet your goals. When you start trading, you need to feel like you are on the right pathway. Feeling lost is going to demotivate you and make you question whether all your work and frustration is for nothing. And a lot of times it is for nothing because you don't have a clear pathway. And with all of the conflicting information and differing strategies out there, it is really easy to be lost and fall into a state of being overwhelmed. But there is an easy fix for this. There's literally hundreds of communities, maybe thousands of communities online that will provide you that structure that you need. And in this community, ZipTrader, we actually have ZipTrader Circle. ZipTrader Circle is a huge community of people who are just like you, looking to learn how to trade, looking to learn how to better themselves, looking to learn how to grow their account. And this is just our free Facebook group, right? So this is something you can join. You have no excuse not to join it. But maybe you don't like Charlie. Charlie's kind of a weird dude. Well, there are other communities out there as well. So look at what is out there and find a community. Just make sure that you find someone to interact with that's actually on this with you so that you're accountable. And also, of course, I do have to mention that we do offer ZipTrader U, which is our paid course and community for people who are looking for a lot of extra guidance, right? I don't think that everybody needs a lot of extra guidance, but for people who are struggling to grow their account or are beginners and just don't want to deal with doing it alone, ZipTrader U is the course that we offer and the private tutoring chat that we offer for you to be forged into a trader and work through all the gaps step by step by step. But my point is find the right community and find the right structure. Okay, folks, well, I do hope this video is helpful. If you have any questions, feel free to reach out to us in the comment section below or join us on ZipTrader Circle. Also, fun fact, one of my first and my most popular video of all time was my day trading for beginners video back in 2018. It's fun to go back and compare how we've changed. But anyways, if you like this video, make sure to hit that ravishing like button, make sure to comment below and let us know, and I'll see you in the next video. Also, of course, make sure to subscribe. One should never forget to subscribe with that ravishing subscribe button.